Hi everyone, and welcome to the weekly update with me, which is Perry Market Analyst at Hantech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, into this week we've got still the markets reacting to the volatility that we saw last week in the wake of sort of concerns over Donald Trump. He is becoming an increasingly divisive figure. The talk of potentially impeachment even, although I think that's probably going a little bit too far. There is still serious worries as to how much of his enormous tax plan that he can get through Congress, and that is certainly meaning that the reflation trade that we've seen in the States is continuing to unwind really. You can see the 2-10 spread which continues to fall away. The bear steepener, which is whereby the 2-year and the 2-year yield rises faster than the 10-year yield, which suggests that the Fed is tightening or on a tightening scale. However, expectations of inflation are not all that promising. So that's the impact there on markets, and that's been seen through the dollar, and it seems to be impacting through the trade-weighted dollar, which is continuing to remain under pressure. The euro is very strong still, but the dollar is very weak still, and that is a continued theme that we've got at the moment. Now, how long this can continue to hold up equity markets remains to be seen, because theoretically you'd see equity markets struggling in a tightening environment, especially when the prospect of sort of 10-year yields not rising as fast as the shorter end of the curve would be sort of less positive for equities going forward. So with equities not a million miles off all-time highs again, is this still supportive of further gains? Now, in terms of what we've got this week, we've got a bit of US data, certainly focusing on the Fed minutes and also the growth numbers at the back end of the week, but the sort of expectation that we could have a little bit more volatility through the middle to end of the week is fairly reasonable, I think. Now, in terms of your Forex markets, we've seen, as I said, the euro-dollar being impacted by not only dollar strength but also dollar weakness, but also euro strength. Now, this euro strength is coming as the economic data continues to improve in the eurozone, and that's sort of driving an expectation that perhaps at some stage the ECB are going to have to react to that. We've got the flash PMIs on Tuesday, which will certainly take focus. Around 56.5 on the composite. Remains a pretty strong and improving outlook there for the eurozone economy. Now, we've seen euro-dollar sort of breaking up recently above 108.50. That continues to make gains, now back above 111 figure, which was a long-term pivot. Now, holding above the 111 figure, I think that's an increasingly positive outlook for euro-dollar. Now, the target from a big base pattern is 113.50, so there is still sort of prospect of further gains in due course. Certainly rallies and little corrective moves are being bought into on euro-dollar, and that remains the case. Now, for sterling, UK sterling is sort of strong-ish, but not as certainly as strong as the euro has been, and sterling continues to make gains with cable pushing above 130, big figure. Not really holding onto that Monday morning, but still the support comes in, and you're generally seeing a succession of higher lows there on cable. So we're still sort of fairly hopeful of further upside, and certainly if that cable rate can hold above 130, that would be a positive. Now, dollar yen stuck again underneath the 111.60 pivot band. That has been a medium-term pivot band over the last few months on dollar yen, and it is again acting as that, and just mildly below it and struggling to get back above it, which suggests that that is a mild bear bias there on dollar yen. Now, in terms of your equity markets, as I said, we've seen some moves, some rebounds, and some moves back towards the old highs again. The DAX and the FTSE certainly those two. But can this be sustainable in the sort of medium to longer term? At the moment, the equity markets are pretty strong and not really been impacted too badly going on a longer term basis yet. Certainly the technicals are holding up pretty well, but it's interesting that we're seeing sort of Wall Street moving into more of a ranging phase really. DAX is pretty strong, FTSE is pretty strong, but Wall Street less so. It seems to be sort of developing more of a range-bound theme. So yeah, 2380 is sort of a near-term pivot on the S&P 500 to watch out for. Trading below that, I think you start to sort of pull more of a neutral outlook there for the S&P 500. So in terms of your commodity prices, again, the gold price I think has been fairly mixed in the last few days, and trading above 1261 would be positive, trading below 1240 more corrective. I think at the moment we're seeing just still a positive reaction following on from the concerns over Trump. And I don't think that's necessarily going to come to an end anytime soon, but I think in the medium to longer term argument with the, again, sort of pulling back to that sort of bear steepener on the Treasury yield curve, and the fact that the Fed is tightening but inflation expectations are not really there, I think that would be sort of a relatively sort of depressive outlook for gold, and that could sort of contain any further upside that we see. So I think the choppy move on gold will continue. But in terms of the oil price, sorry, that was a bit soon. In terms of the oil price, I think the OPEC meeting on Wednesday will certainly have a big factor to play. We've had a big rally in oil in the last few days, pulling up above some key resistance levels on both WTI and crude, and it looks fairly positive for further upside. Now, what we will see, I think, is on Wednesday an extension of that production cut agreement through OPEC. Whether they can, whether they sort of extend the whether they deepen the production cut is another matter. That's a possibility, but I think it's unlikely given the fact that the US shale oil continues to sort of make up some of the slack, and I think that will remain a bit of an issue going forward. So I think they'll probably extend it by maybe 6 to 9 months, but not necessarily deepen the cut. So in terms of your economic calendar, as I said, flash PMIs on Tuesday. We've got the Bank of Canada with an interest rate decision on Wednesday, Fed minutes on Wednesday night, then Thursday we're looking at UK growth, and then Friday US growth, and also sort of produce a bit of volatility coming in towards the end of the week. So I wish you good luck in your trading this week, and I'll speak to you next time. Thank you.